Welcome back, folks, to Investor Diaries. Hope you have been enjoying our latest content. And if you've not already done so, please smash the subscribe button right now to make sure that you get notified of all the latest and greatest content on Investor Diaries.
Now, today, we want to put the spotlight on another company making waves in the metaverse. Now, how would you like to visit a digital twin of an actual physical space? That is the primary use case this company is betting on. Yes, we're referring to Matterport, and we'll talk all about that in today's video.
All right, so Matterport, which trades under the ticker symbol MTTR, is the leader in the digitization of the built world. So what this means is that they take real spaces and create what they refer to them as digital twins. Now, these are essentially interactive 3D virtual spaces that you can view, much like a digital dollhouse that you can explore and interact.
Yes, and here are some of the example spaces of the space if you want to see what they are like. The number of use cases for this company is incredible, and that leads to great optionality. Of course, there are great risk factors, and the company reaching their full potential will definitely require great execution.
So the stocks dropped tremendously along with every other growth stock since rallying to an all-time high at the beginning of October 2021. The sky is the limit for this technology. They're going to have to be better at monetizing it to succeed, and their track record in monetization is fairly spotty.
Now, let's take a look at the brief history of Matterport. Matterport actually started out as a hardware company. The original product was a Matterport Pro 2 camera, a high-end camera built specifically with the goal of capturing 3D spaces to build digital twins.
Now, as the company began marketing and selling this sophisticated piece of hardware, it became apparent that in the long term, the value proposition came not from selling cameras, but from selling subscriptions and extracting data from the resulting digital spaces.
That's right, Api. This is a much better value proposition for the company as it moves the primary revenue stream from one-off expensive purchases to much more dependable and recurring subscription revenues. The core of the growth proposition is no longer the hardware side, but on the data and the visualization side of the business.
All right, so there is significant optionality for digital twins. The most obvious one is real estate. Now, the ability to have a full 360-degree digital walkthrough of a property boosts property engagement, it leads to faster sales, and it also leads to higher sale prices.
Real estate is only the beginning. Rental properties on Airbnb have a much higher engagement and higher bookings when they have a Matterport twin in their listing.
So as an example, if Chick-fil-A, who's a Matterport customer, needs to do upgrades or check if their space is conformed to the new OSHA standards, they can check their 2,700 plus locations for compliance in the same amount of time it takes to do a simple Google search.
Additionally, individuals and businesses can generate automatic floor plans that are accurate to the inch.
Another use case, a manufacturing engineer can diagnose and solve assembly line issues by virtually viewing the factory floor while connected to the IoT modules, giving real-time throughput numbers, temperature readings, and any other data that they might need to solve issues.
Retail clients can have customers explore their stores, fill a digital shopping cart, and check out without leaving their couch. There are hardly any industries that could not benefit in one way or the other from using a digital twin.
Now let's talk partnerships. Matterport has partnerships with some of the biggest names in tech, including Meta, which is previously Facebook. In June, Matterport announced their collaboration with Facebook AI Research. Now, this is strictly a research partnership with Matterport sharing data with engineers and universities to advance their AI algorithms.
Additionally, Matterport has also partnered with Google to have seamless integration of their digital twin into the Google Maps, so they can be viewed in Google Street View. Here is one such example.
Further, in one of the most recent integrations with Amazon announced in December 2021, Matterport is now available on the AWS marketplace. Now, most of the AWS businesses have IO from their businesses and facilities that are cataloged.
All right, so we have a good understanding of the product. Now, what are the risks with the stock? A lot of factors have contributed to the drop in stock price, such as the macroeconomic factors we talked about earlier, like the broader market sell off and the lockup expiration of the insiders with the SPAC listing. But if you look at the fundamental factors, there are some concerns with respect to poor execution.
All right, so the first one that comes to our mind is over reliance on real estate and cyclicality. One of the big reasons that we worry about the future of Matterport is that most of their businesses is reliant on the real estate industry. Now, real estate is cyclical by nature, and Matterport is overly dependent on the number of listings that are there in the market at any given point of time.
In Q3 2021, real estate was about two-thirds of the revenue. In Q4 of 2021, it sits at about 66%. We at Investor Diaries would love to see the adoption of this software in other industries and verticals as well.
The next risk is decreasing net dollar expansion rate. Now, net dollar expansion rate is the amount of revenue that Matterport sees this year from existing customers compared to the previous year. If Matterport customers love their products and get significant benefit from them, then their number should be going up over time. While this number is still over 100%, meaning that customers are spending more year on year, the numbers have recently been declining.
The fourth quarter is always a down quarter for real estate, so it makes sense that the overall revenue would decrease. However, our hope would be that this would be supplanted by increased demand by other commercial subscribers. That unfortunately has not happened.
So for context, Matterport uses a freemium model to build their subscriber base. And this is with the hope that they will see the value and pay for additional functionality going forward. Now, the problem is that their conversion rate in this case has been decreasing over time. In the Q3 earnings call, they mentioned that the conversion rate from free to paid users was about 8%, and free users usually convert within 45 days.
And this conversion rate from free customers to paid customers throw up a number of red flags. First, total paid customers went from 54K to 55K from Q3 to Q4 of 2021. This can hardly be considered as robust growth. Second, the conversion rate is poor. Between Q3 and Q4 of 2020, they added 51K new members and 4K new members were paid, for a conversion rate of 7.8%.
The trend is clear. Each quarter, their free subscriber growth is increasing. It's growing very robustly, but the proportion of those subscribers who turn into paying customers is decreasing over time.
And the last risk we would call out is supply chain hardware issues affecting more than just hardware sales. In the Q3 earnings call, Matterport decreased their Q4 2021 and 2021 full year guidance. The main reason for this was due to supply chain issues leading to lower sales on their Pro 2 camera, mostly attributable to chip shortages.
So sure, supporting customers is really important, but their supply chain issues have resulted in a double whammy for the business. They're now losing money on every camera they sell, and hardware sales still make up about 30% of their revenue.
All right, so what is Investor Diary's recommendation? Matterport is the same core business it was when the stock ran into the 30s a few months ago. The valuation was astronomical then. However, the valuation is a lot more reasonable now, but it is still trading at a price to sales ratio of 15.5 based on the 2021 revenue. And it is a digital growth story that is just getting started with a large host of real-world applications.
Matterport also has an executive team with the capability and vision to build the rails that move the physical world into the digital space.
And there are a lot of commentators and analysts that are very bullish. Josh Brown from CNBC's Investor Committee is super bullish on Matterport and its future goals. However, due to their subpar execution, we at Investor Diaries are still not convinced that they're capable of fully monetizing their product. This company is definitely an exciting opportunity in the future, and it holds a lot of prospects in the metaverse. But our current recommendation is to hold and add it to our watch list for now. Two potential things that could change it to a buy would be a further drop in stock price to make it further attractive from a valuation perspective, or the biggest catalyst can be a better execution to improve the margin or premium of paying customers.
That's a wrap, folks. Do let us know what you think of the Matterport stock in the comment section below. And as always, Stay strong and stay focused. Thank you.
Thanks, everyone.